Hello, welcome back to Control Energy's YouTube. Here with me is Paul Gezzi, the CEO of Control Energy. We are here to talk about the Q3 announcement. How are you doing today, Paul?
I'm well, Michael. How are you?
I'm really enjoying my Thanksgiving food. It's really digesting in there. So tell us more about these numbers on Q3.
Sure. So we had a very strong Q3, 9 months, and really following and executing on our business plan, but revenues of approximately 10.9 million. So up until Q3, that's more than all of last year. If we look out to the end of the year, between 15 and 16 million of revenue is about a 40% increase overall of last year. So we're really executing on our business plan. We're delivering on the top line. We've had 4 quarters now of positive adjusted EBITDA, which basically says as we're growing, we're also really keeping a strong watch on profitability, and that's something that's very important to us. So overall, we're very pleased with where we are and excited about the future.
Wow, yeah, that's really good news. So with that, what caused this revenue increase? Was it just lots of planted seeds coming to bloom, so to speak?
So it's a combination of things. Last year, we completed a few acquisitions, and we worked very diligently on adding organic growth. And so in terms of acquisitions, 2 of our acquisitions are now working together, cross-selling revenue, which is a big deal for us because they can drive each other's business. So specifically, our software as a service platform, which runs in approximately 200 buildings, 20 million square feet of real estate, provides real-time energy analytics, energy management, and performance monitoring. That led to a number of successful projects won because of that software. So those projects end up being, fairly sizable in revenue, 350,000 per site to 500,000 per site win. And that really drove the organic side of the business. We have a lot more of those coming next year. And it's an example of how our diversified approach to building our business is paying off. And the organic growth rate by the end of the year, based on achieving our numbers, is going to be somewhere in the range of 30%, which is very healthy for a company like us.
Yeah, 30% is really good. With that, though, do you think the things that helped Q3 look so good happen again in Q4?
So I think right now we've spent the last 4 years building a strong foundation. We've got new customer wins, which we're going to talk about. And in that foundation, we've now set the stage for much higher growth. And so we think, the way the year is going to shape up, we end up about 40% higher than last year, which includes Q4. And then looking out to next year, we see some very strong growth in the business organically.
Most companies' revenues with your growth are typically valued 2 to 3 times their annual revenues, but your guys' market cap is surprisingly low compared to its competitors, more of a 1-to-1 ratio.
Yeah, thanks for pointing that out. that is a sore spot for me, but what I've learned is CEOs have to drive the business. The share price over time will reflect the business. I think it really comes down to we're not well known. We're not institutionally held at this point. We are a true retail story. As we continue to perform, as we get the story out there, as people get to know us and see us executing, I think that changes. And I always like to remind, potential shareholders or current shareholders, insiders, which includes management and the board, own about 47% of the company. So we're here to stay. We're here to build a real business. We're here to drive value. And sometimes you have to separate the short term from the long term. We see ourselves catching up in that regard. But yes, right now, it's not where we'd like it to be, but we think that's going to change over time.
So there's been some volatility in the share price. What do you think has caused that?
Well, that's a great question. So I'd like to separate, the stock market into 2 buckets, large caps and small caps. And so large cap companies, we're all familiar with, they're held in ETFs. They would be your household names. The small cap market is really different from the perspective of when there's some uncertainty in the economy, when people get a little nervous, small caps tend to perform less well than large caps. So I would say this year in general, Canadian small caps have not performed well. We're part of that ecosystem. We think we're separating ourselves with great execution. But when all small caps are down across the index, we're going to be down with them. But we think we escape that over time as we get bigger. We execute, put points on the board, people get to know us, And you can't escape the short-term volatility, but yes, it has been more pronounced in small caps. And I think part of that is also the cannabis market in small caps has really taken a significant downturn. And I think a lot of investors were in a lot of names that have not performed well this year. But we think, we've done relatively well in a tough market, and our future is very bright.
Yeah, that's a good point. It is very fair to say that small caps are more exposed to the volatility of the market.
For sure.
And but quarter three, again, that's really positive, and this should really increase investor confidence and increase your exposure as well.
Yeah, I think we're in a show me market where people say, show me you can execute. So we had a bunch of new investors say, well, let me see how you do in the quarter, and we'll take a strong interest in Kontrol. And I think that happens to a lot of companies where people just want to see you perform quarter over quarter. And so what I say to our shareholders is, we're not a pure quarter over quarter story. We're a year over year story. So what do I mean by that? Well, we started 2016, 1.9 million in revenue. The next year, 6.9. The next year, 10.7. This year, between 15 and 16. So you can see the points on the board now. Starting this business at $1 million of revenue, roughly 1.5, 1.9 that year. And look where we are today. So I think you make a great point that execution matters. And, we are an execution story, and we're going to keep executing and grow the business.
As you said, it's more of a long-term play. If everyone's looking at these little quarterly reports waiting for the perfect time, they're kind of missing the boat.
Well, I would say, in general, my feeling is the markets have become much more short-term and speculative in the small cap part of the world. But saying that, building a business takes time. And of course, you have to perform while you're doing that. And I always, as the principal shareholder and CEO, I view this as a 5-year business where you're scaling up and getting to the next level and putting points on the board all along the way. I certainly don't view the business as a 5-month business. And that's where you get a little bit of a difference between a shareholder and a speculator. And there's nothing wrong with speculating, that's part of the market. But our story is execution, points on the board, a long-term shareholder value.
And with that, do you think we will achieve the goal of 30 to 35 million in revenue by 2020?
So let me tell you what we've done. We've done some really important things this year. So we announced a partnership with Toyota Tsusho, which is a global conglomerate owned 40% by Toyota. Have about 200 factories they service. These are large industrial manufacturing, auto manufacturing, parts manufacturing across North America. So we are now in those facilities, many of them, installing our technology, our software, our hardware. And we've received our first order in Q3, which we're installing in Q4. And next year looks very bright in that partnership. We've recently announced a successful pilot with a plant-based meat substitute company. And as your viewers or our viewers would likely know, those companies are really growing at a fantastic pace, driven by the move to meatless. We expect our first order to come from that new global customer in Q4. So that's a major new customer win. And we've just announced a significant partnership in Saudi Arabia that opens up a large potential group of new customers in the region. So if we take all those together, we take our underlying business, we see 2020 as being a year of very robust organic growth for Kontrol based on the platform that we've established today.
Wow. So you've really planted the seeds in 2019 for 2020 to be your guys' best year yet.
I would say 2019 was the year of really developing relationships with what we call globally branded customers. Customers that could scale our business dramatically in working with Kontrol. And so we're very pleased with where we are. We hope to make more announcements in that vein, in the coming months. But the way we think about our business is if a customer that you're working with, has one facility, well, that's what you're going to get. But if a customer you're working with has 200 or 10 or 30, you have a chance at all of them. And so the more we can grow that part of our business, the more we can scale, the faster we scale, and the happier we all are.
Yeah. The more businesses they have, the more room to grow.
That's right.
So with that, is there anything else from the report that you want to share?
So I think what potential shareholders or existing shareholders should really think about is what is the groundwork that we've established this year in meeting our target, and where are we going next year? And if you can see, through the hard work that we've put in this year, the customer wins, the new opportunities, we're very bullish on 2020, and hopefully our shareholders and potential shareholders are as well.
They need to catch on, man. You guys are doing great things.
Thank you.
So from that, don't forget to join the Telegram, join the conversation, and stay tuned for next week's update, everybody. Thank you, Paul, for coming on.
Thanks. Have a great day. Thank you.